Hi everybody, Jeff Yastine here. Make sure as always to subscribe to our YouTube channel. Follow me on Twitter. The handle's @Jeff Yastine, and on Facebook as well. The username is Jeff Yastine1. Well, the stock market's behavior last week was one for the ages. I mean, rarely do we see that kind of continuous straight up sort of rally every day with the major indexes racking up those kinds of percentage gains. Now, in this video, I'm going to show you two things. One is how to deal with the psychology of what happened, because I think I know how some of you might be feeling right now. And when the market explodes like that, relentlessly higher for numerous days in a row, it can catch you by surprise, like the proverbial deer in the headlights. So more on that in a moment. The other thing I'm going to show you is a couple of stocks that I think are destined to continue to move higher as well. So first things first, from Monday through Thursday last week, the S&P ran up more than 7.5%, the Dow rose more than 6%, the NASDAQ jumped 9%, and the Russell 2000 small caps index rose nearly that same amount. Now, a lot of what happened was to be expected. Last weekend, I posted a video on my Twitter account and on Facebook noting via the put-call ratio charts that I monitor how suddenly investors had switched from being incredibly bullish early the previous week to incredibly bearish at the end of last week or the week before that. And whenever people switch opinions that quickly, it's almost a certainty that the market will move in the opposite direction. So keep your eye at this point on the Russell 2000, because it has been the weakest of the four major stock indexes over the last few years. But last week it shot up to its highest price since before the pandemic. And if it can keep working its way higher, it would be on track then to challenge its all-time highs, which were set almost 2.5 years ago in August of 2018. So I think that's our canary in the coal mine for the rest of this market. Now, to get back to the psychology of trading, after a series of incredible rallies like we saw last week, it can sometimes be almost depressing if you by chance were not fully invested, or if you own stocks that did not happen to go up or go up as much, or maybe you're just busy dealing with things that in your life, things with home, things at work, and you just didn't have the time. So now you might be thinking, man, I just missed this rally for the ages. Jeff Yastine just told me about it. What do I do now? Well, first up, take a step back, get a readjustment of attitude. You might be thinking, I'm going to go in Monday morning and I'm going to go in and buy with both fists. Well, I'm going to play catch up and get all those profits that I missed out on last week. So my advice is fight that urge. Now, I know that feeling myself. We all do here. If you decide to plunge in next week, you're like the man or woman who walks into the casino, goes straight up to the roulette wheel and places everything on red or black. Take your choice. Whether you're an investor or you're a speculator, you have to play the long game to survive and ultimately win. And that means choosing your battles, being strategic about placing your trades instead of being reckless, which is easy to do when you're emotional. Second step, be careful about volatility. On election night, I said it, my colleagues like Roger, Scott, and Jeffson and Neri said it as well. Typically, when someone says, volatility, we think of a stock or index dropping off a cliff, downward, but it can just as easily mean a stock or index rocketing straight up. And that's what we got last week, of course. But the reason volatility can be a killer to your portfolio is because the daily and weekly swings in the market suddenly get much larger in both directions. And that's where people get hurt. When the market rockets higher, for instance, we become way too confident. We bet too much, or we're betting out of emotion, the fear of missing out, FOMO we call it. If the market suddenly moves even for a few days in the other direction, that swing lower can force us out of our trades, force us to take losses that were bigger or more frequent than we expected. Of course, that's bad news. Third step, there are still plenty of stocks out there, in my opinion, that have barely been touched by this rally. A good example is CVS Health, symbol CVS. On election night, I did a special streaming session for Wealth Press subscribers on my favorite stocks to buy for a Biden or Trump presidency. CVS was one of them. And as you can see from the chart, it's up about 15% in the past week. The great thing is you can still buy the stock here. Now, I doubt it will explode in the next 5 days like I did in the last 5 days. But as I told WealthPrus streaming viewers rather on election night, this is a stock I expected to rise by 50% in the coming year and to double in the next 2 years. Writes most of any drug retailer, the most prescriptions in the U.S. is fully equipped to do immense e-commerce, the same as Amazon does, and it pays a dividend, and it's just an incredibly cheap stock for a company that's been consistently profitable for decades on end. Fluor Corp, symbol FLR, is another stock that I gave out to our streaming audience on election night. It's up about 20% in the past week. But as you can see from the chart, it still has a long way to run to its old all-time highs. Its profits are on the rise, and the stock is priced on the cheap relative to those profits. And I said that I thought the stock would do well regardless of whether we had a second Trump term or a new Biden presidency, and I believe that to be so. Fluor is an industrial design and engineering firm. If you need a new manufacturing plant, a new chemical plant, a new mine, or any number of logistical or industrial services performed anywhere in the world, Fluor is the company that gets the job done. So it's on track to earn more than $1 a share this year, rising to $1.22 by 2022. And from a technical analysis perspective, Fluor shares recently crossed over its 200-day moving average for the first time in 2 years. That's a good sign for a stock on the upturn. And I think that this stock, as I told our election night streaming audience viewers, I think this stock could double in the next 2 years. And I think it's already well on its way higher. So it's still buyable at this point. So I'll round it out there. If you made money in the last week's rally, that's great. Congratulate yourself. If you missed out somehow, don't worry. There's always another train leaving the station. If you like what I'm talking about, make sure to follow us on all of our social media platforms. I'm Jeff Yastine. We'll talk to you later.